Thank you for joining me. I'm Scott Ryan. Well, it would possibly seem to some as though I were remiss. It's been a while since I've come out with any stock recommendations, but believe me, whenever there's something compelling out there and I want to buy it, I share it. After all, TableOfWisdom.com was founded as primarily a financial news website, but unlike Wall Street analysts who have to come out with the daily pick of the day because their sole purpose is to generate commissions for their firm, I don't make superfluous recommendations. When there's something extremely compelling out there, I'm going to buy it or short it, depending on whether the value is extremely over or under. And as a value investor, I don't really make a distinction, although on the short side I do manage risks by not outright shorting, but rather buying puts, long-term puts on a company so that the downside is limited. If there is value out there or something compelling, I share it. And that's what I'm going to do today. First, I'm going to recap all of our recommendations, or I should say my recommendations, here at from Table of Wisdom since inception, which was 2008, June of 2008. We're going to go over those, and I'm going to have one recommendation for you at the end. Initially, we're going out to 2009, when I made the first four recommendations, which I'll be highlighting. I'll be posting these with time-stamped link from a third-party independent source. I always do that to make sure that everything's above board. I post them at sites, my recommendations, not just at Table of Wisdom, but at other sites where it could not be contended that I would have the ability to go in and make changes of any kind to those recommendations. So I'll have all of that linked to TableOfWisdom.com. Nevertheless, if you look at what I've posted today at TableOfWisdom.com, starting out, most of the picks, the first four, were made in 2009, February 23rd. Under Armour, as of today's closing price, April 26, 2012, I initiated the buy of Under Armour at a closing price of $14.12. Today's closing price, $97.59, up 691%. eBay, up 356% since February 23rd. Tuesday Morning Corporation, up 413% as of today's closing price of $4.05 per share. Daktronics, up a mere 5% as of today's close of $8.22 a share. And then more recently, there were two recommendations made in this past September at TableOfWisdom.com. The first one being the Select Spider Utilities Exchange Traded Fund, or ETF. If you bought it at that price, that day you were locking in a 4% dividend yield. And since then, it's appreciated 5% in addition to that. So not a bad yield if you were looking for something. This was actually geared more towards those who were looking for income that were being strangled and forced into junk bonds by the Federal Reserve policies. The intention here wasn't to knock it out of the park with growth, but this was more geared towards senior citizens and people who need a fixed income that didn't want to risk their life savings on junk bonds, as Ben Bernanke has forced many to do, to their consternation, or what will be their consternation when rates are finally forced up. And the second one, the other recommendation on September 27th, 2011 was Microsoft, which as today's closing price, it's up 25%. That was my other fixed income, low risk recommendation, locking in a 3% dividend with a nice 25% respectable return since then. It's a lot better than sitting in junk bonds or CDs yielding, 2% if you lock it up for 5 years or more. So it's a very impressive return. Out of all the recommendations since inception of TableOfWisdom.com, the worst return that I've experienced is 5%. And guess what? It's not coincidental that that is recommendation number one today. My worst performing stock since inception is Daktronics. Daktronics is up 5% since I recommended it. I am long, of course. I own Daktronics stock. I love Daktronics stock. It is egregiously, in my opinion, way undervalued. It was knocked down originally to where it is because the advertising market had slowed down. Advertising isn't going away, but it is cyclical from time to time. When advertising dried up, some of their largest clients pulled back and spent less. But even then, the company was growing their revenues and earnings by double digits. Now, Daktronics is a company that I believe is practically trading, for all intents and purposes, for free at its current, at its current market cap of $350 million in an industry that is basically, I believe, going to be a $40 billion a year industry, and I'm not alone in that assumption. They are poised to dominate for years to come. Right now, Daktronics is like the Intel of their industry. And let me tell you, Daktronics has been around for a long time, going back to the 1940s. They were founded, you see their products in many gymnasiums, the old electronic scoreboards. But more recently, you've seen some of their multi-million-dollar screens in these stadiums around the country, these mega stadiums with mega dollars invested in them. Now, that's a very limited audience right there. There's only so many stadiums being built around the country. And that is not, despite the fact they're making profits on that industry, that is not what I'm excited about. We are in a media-driven, multimedia-driven world, and it is becoming more so every day. Daktronics' most significant product, their main product, is just at the beginning, the infancy of a huge global explosion in demand. And what I really love about Daktronics is they dominate their industry. There's a few companies, there's a few players, but they are like the Intel of the multimedia digital billboard industry. You're starting to see their products pop up throughout the country, and even they're selling in Europe and Asia and everywhere. But they are, if you want to look at just an analogy, they are to that industry. They dominate it in the way that Intel does microprocessors. Now, Intel is a mature industry now, but you remember how they grew way back when, before it was commonplace. Daktronics is the key player. They dominate the market. The other players, you have your little AMDs out there. But Daktronics has critical mass. They have the infrastructure. They have the best technology, the best customer service, everything about the company. But it's a tiny sliver right now at 350 million. If you just look at what is happening to the US dollar, to all fiat currencies, that is nothing compared to, as the Federal Reserve continues to debase the currency and reprint it. Revenues at companies and market caps, as I've said for the last several years, are going to explode. You're going to be seeing trillion-dollar market caps out there. And we are talking about a company right now selling at $350 million, roughly, total market cap, that's extremely profitable and has a huge multi-billion-dollar market cap potential. I think this could be the biggest winner. Yeah, Under Armour at up 700% and eBay up 400% in just the last couple years, and Tuesday Morning up 400%. These are all great, but I am more excited about Daktronics than I am about any of those companies. Those are all great companies with great leaders that execute well. But Daktronics, the growth, I mean, look at all the billboards out there all around the world. It is so primitive. It is a very primitive industry that, I mean, look at what goes into a billboard. You remember seeing all those people up there climbing these outdoor poles and having to go up there and wallpaper and pay the people to wallpaper these billboards on there? And it's so static that, I mean, to make that worthwhile, you've got to have those things up there for a long time. And just everything about it is revolutionized by Daktronics technology. Now these billboards can be tailored, just like when you're almost like when you're on the internet and you see ads that are tailored to you. It's going that direction. Throughout the day, certain ads can be run. Nobody has to go up there and paint a picture or put up the wallpaper. It's dynamic. They can sell more ads and make more profits on those billboards and run them specific ads targeting specific people at specific times of day. It's revolutionizing the industry, and just a diminutive portion of the world billboard system out there is being touched. So when I look at Daktronics, and not only that, but the stock, they've been raising their dividends consistently and declaring special dividends. At this price, the stock dividend, I mean, the actual dividend yield is about 7%. So, yeah, I mean, I was excited about buying utility ETFs and getting a 5% yield in this kind of market. But here you've got the best of everything. You have an incredible dividend yield, and you've got an industry that is poised to explode. So, and I believe at this low price, I mean, there's a certain point when you're talking about profitable companies, they can only go so low. The floor is not psychological here. The floor is based on cash flow and earnings and equity. I mean, they're close to their asset values at this price. It doesn't get any better than that. So it's kind of funny that you look at my list of winners here, the TableOfWisdom.com track record going back over the years, and that is my worst performing stock, but that is the one that most excites me. And there will be others to come. Believe me, I'm looking at other opportunities right now, but there aren't that many compelling ideas. I don't come out with superfluous recommendations like Wall Street analysts do. They have to generate commissions for their firm. That's what they're paid to do. They're not paid to sit back and be careful about making logical recommendations with business sense behind them. There are some other opportunities that I'm watching out there. There are companies that I am waiting for a pullback and I believe will come to engage in them at extraordinary value. And then there are companies that I believe are right now overvalued, but I also believe that they will become way more overvalued. And when they do, I'm looking forward to recommending the shorts or the put options on those companies. I'm not there yet. This is the most compelling idea that I have right now. This is what excites me. Extraordinary yield. While you wait, you get paid in an industry at its infancy with, I mean, multi-billion-dollar potential. I said the same thing. If you look at the reasonings, I always give my thought process on these recommendations. If you look at my Under Armour recommendation, I was very specific. I said, right now, that day, if you look up the historical quote, Under Armour was trading at $715 million market capitalization. Meaning that's, if you take all the outstanding shares and multiply it by the share price, that's the total price of the company if you were to buy all the shares. $700 million. And I said that this company may someday be bought by Nike, but they wouldn't be stupid enough to sell it, because people were spreading rumors that they might sell out to Nike. I mean, even at 100 or 200%, I said that was absurd. I said they wouldn't be stupid enough to even consider it for anything less than $5 billion. Look at today's price. Under Armour's market cap, 2 years later, $5.1 billion. And I feel the same thing. I mean, Daktronics, I believe, right now, trading at $350 million, I believe that a few years from now, at minimum, I mean, not even a few years from now, I think fair value for this company right now is $1 billion, which would put it at, I mean, I'm just rounding off. There's no exact price. There is some subjectivity, but reasonably $1 billion, I mean, it should be a triple from here. I don't know if that's going to happen this year, but over the next few years, I expect this to be potentially a $5 billion stock if they are executing properly. They could grow slowly and continue to pay that high dividend, or they could grow more quickly and continue to pay that high dividend. I believe the value is compelling, and this is my pick of the year so far. Just reiterating my former pick, the one, my loser from 2009, DAKT is the symbol. Do what's best for you. Do your due diligence. I don't know your asset allocation. I never recommend putting anything more than 5% of one's total net worth into any one stock. But I also don't believe in over-diversifying. Personally, I like to take a handful of picks, as you can see, that are in diverse industries that aren't dependent on another. The only one that's not in here, of course, I've been long gold a lot longer than Table of Wisdom was born in 2008. I've been posting as Mr. Arbitrage and have been long gold since 2004, I believe, 2004, 2005. So I'm long gold at around 300 an ounce. But other than that, you can see I don't make a lot of recommendations. I'll make them as I feel they're appropriate. And I was a Wall Street professional for about 16 years. I no longer do that. I don't charge for this. I don't pimp a newsletter. If you want my recommendations, you simply email me at mrarbitrage@tableofwisdom.com. I'll be glad to email you my future recommendations as they come. I do this because it's one of my great passions. I also really loathe Wall Street and the way that the industry works, so I consider it a service. This is what I do. Thank you for joining me. I'm Scott Ryan.